Welcome, everybody. We're going to get started in just a sec here. Sharing this with the Discord. Hey, Kurt, Coach TB, Hypercube. Thanks for joining us. Holiday Friday, Sleepy Friday. I ate too much ham. I don't know. It's going to be chill vibes. Chill vibes today. Right. All right, there we go. So we should have my screen popping up for the Discord guys there. Cool. We're going to get started. Oh, camera too. Oh, can't do camera for the Discord guys. Sorry. All right, we're going to get into it, guys. How's everybody doing? Spicy Friday here. We got Cleo in the background. I'll let her out, then we'll get going. So, let's take inventory of where we are. We're going to hop right into the charts here. It's a lot to talk about. There we go. So we're just going to get right into it. So first off, let's check out the daily chart on the right here of SPY. Because I think it's super important we remember where we are. Not to get too exuberant, but also to realize we are just potentially starting a major rally here. So how we are going to be framing this week, because this week we're going to be talking about the trades I took, also the trades I'm looking to take. Basically, we were very, very bullish right out of the gate this week because we were expecting this Santa rally to finally come to town. It had been waiting, and this drawdown here was really making people doubt it. But if we kind of check in, take inventory of what we actually got, it really wasn't that crazy. Really wasn't that crazy of a pullback. We didn't even quite get to the 50% of the previous range. Let's redraw this to this swing high. And you can see that, yeah, it's really, really not too crazy. So it just came into the 38 fib, came under, reclaimed, and then we were back off to the races. So this is a very healthy little pullback after a big V shape that we made. And now we're starting to have a lot better structure where we're consolidating here and now starting to break out of the base. So this was a lower high and a much higher low. So we are starting to get going here. What they can do is shake the tree once more, come back down. I'm thinking, see this big volume spike on the volume profile? Thinking they could retest the 685 area once. Come down there next week and then we go up. So that is a possibility. There's going to be some kind of shifting going on in the first couple weeks of January here as positioning, starts to kind of entrench itself for the coming year. And what we'll really be watching for is on January 16th, we're going to be watching the leaps that are, early January, but just basically we're going to be watching the leaps in the first couple weeks that are bought on positions that we are considering that are on our focus list. We want to see where the options flow, where the new money that's coming into the market is going to take us. But in terms of next week, I think that we can keep it tight and push up, maybe just a little dip down, retest this 688 area. And if so, we're just going to be watching for a break of the all-time highs for continuation on up. Once we do kind of get that follow through, then we're going to be really bullish here, and we're going to be, looking for a couple weeks to a month or two of a nice, easy rally. What we could be looking for, though, is in that small pullback to get positioned in some names that we think are strong. So that's kind of my game plan for next week. I think that, like I said, we are pretty darn close to really moving on out of this range, but it could play with us just a little bit. So we take these top wicks, just going across. You can see it was the natural resistance here, and now we are digesting it. So this is the zone I'm watching here. If we look at the other indices to get our bearings here, QQQ, this one's a little bit cleaner, actually. It's a little bit tighter of a pennant here. So I usually like drawing my downtrend lines from the top of the first impulse push up right here, because this is where the initial buyers from the bottom kind of tapped out. And then this was, I think, kind of almost like new buyers trying to push it higher and failing. So this is the kind of area that I'm interested in. And when it comes down like this, tells me that we're getting really tight here and very close to trying to just kind of accelerate out of this. So we're seeing SPY with the flat top, Qs with this kind of downtrend line here. And, it's a nice double bottom, regardless of how you look at it. And how I kind of see it as, okay, we false started here, having this crazy, crazy gap up breakout. And then we had to reset and rebase, reform. And that's what I consider this, a new formation. And the move that we should be looking for the rally should be roughly twice the size of the range. So this is another area where fibs can come in handy. Hey, Talk, good to see you in here. Sorry, catching up on comments. I got you guys comments far on the far side here today because I need to do the big screen. So I gotta turn the head. It'll take me a few seconds. Oh yeah, Nick, those scalloped potatoes, so good but so heavy. Good to see you guys in here. Awesome, awesome. So yeah, let's just power through these indices here and get to the fun stuff. But in general, nothing's looking bearish, huh? We could see some pullbacks, and I'd be a dip buyer. So IWM, another really interesting look. Here we're gonna actually pull out to the monthly. I think it's worth. Or let's go weekly. Nah, we need the monthly. So I need you guys to see just the bigger picture here. People are worried that we're running too hot and that the Santa rally is completely over. I think there could be chop, like I said, but when you have small caps on a monthly and they look like this, get these out of the way. So what I'm seeing here, this is IWM, seeing that we had this previous resistance. See the distance of the wick there? It's a good approximation. And that was a very good approximation for this rejection. They tagged the new high algorithmically, and then there was a ton of sellers. Needed to go all the way back to the bottom of the range. And you see this range was roughly this last candle up here. When we push up like that and then reject, you can kind of view that as a level of interest because that was an area that came up and then ended up being net sellers that ended up being quite strong there, but then got blown out and now got back tested here multiple times, even once more here. And so then off to the races. And now we have this really nice cup. And I mean, it's a pretty sloppy handle with this move down. I'd just consider it more of a almost ascending triangle. But regardless, we're knocking on this next range here. See, just kind of building on up. And these moves are really strong. So the last time we saw one of these was basically this, I believe. No, not even. I think it was way back in 2016, where we had this really nice base, and essentially it was good for a double. So I'm really thinking that IWM has potential to 300 here. The point being, when small caps are just breaking out like this, this is not things that happen in a bear market. Another good barometer is XLF, our financial sector. Sure looks to me like this is insanely strong and trying to squeeze up on out of this rising wedge here, which you can say, hey, rising wedges they're bearish, right? Well, they often fail. So, if it does fail, so be it. But when it's literally the financials into a loosening credit cycle, I feel like we should be betting long here. And all this is really telling me is that this is a ton of kinetic energy being built up while it's still moving higher. And now it's trying to break out of the top here. And it looks like it wants to keep going. So this could have quite a bit of room on it. I'm kind of looking at the 60 handle here. And regardless, don't think we're ready to actually pull back yet. I was hearing some was hearing the R word, the recession word, get thrown around. I don't think we're there yet. I think we got legs here to run it hot. So that's kind of my overall stance going into the next year. And the other big thing I want to talk about, and I'm kind of teasing my overall theses going into next year, my kind of general perspectives on things overall. Next week we're going to be really diving into that. I have a whole write up that we're going to go over all of my picks for next year and how I'm personally moving into them. But for this week, just going to be setting the stage a little bit. So another thing I want to talk about here is XME. And we're going to go, I don't have enough price data to show you, but XME is pushing out at the top of a very, very long-term base as well. And whenever I'm seeing this type of action, I'm just thinking like, okay, so it seems like the move might be long in the tooth because we traded from the bottom of these ranges. If you were thinking of things like, let's pull up FCX, for example, copper's doing amazingly for us here. So, I mean, it's a very substantial move. It's like 30% now almost. But when we zoom out, it really looks like these names are just getting started on a higher time frame. So this is what I'm kind of thinking about as I'm going into the next year here. I want to zoom out and think about where I want my money working for me. And look at that. Doesn't that look like a chart that could keep going? If that was a 5-minute chart, I'd be looking for a little bit of a pullback somewhere in here to get long for the breakout. And that's kind of what I'm doing. I'm looking for little pullbacks, between 5 and 10%. And I really want to be buying more of these names. So we'll talk about a few of them here. Freeport's great for copper. It's a large cap, high liquidity, probably the best for day trading. And I want to draw out the top range here, just so I know where I am at in the big picture. It's roughly like that. So the idea here is over the next year, I'm betting on this kind of pattern over across a lot of commodity miners to break out. Here's another of my copper picks. And essentially, we'll get into all of the reasoning next week, but I'm expecting commodities to have a very, very good year. And I want to be a part of it. So here's another really nice chart on the monthly here, ERO. And this is another copper miner. Sorry, it's jumping around here. Let me fix that. Why won't it let me move it? Oh, well, that works. Basically, we're seeing a big double bottom here, and we're breaking the base. So these types of patterns have lots of room when we get moves like that. It tells me it's just starting. So I like the copper miners a lot. We can also look at some steel names. And so this is one half of my thesis, or my yearly thesis, that commodities will do very well for a number of reasons. And the other part is that AI is still in the middle innings in terms of the market. We still have a lot of gas in the tank in terms of the narrative and in terms of just the build out that's going to be needed for these projects. I am a skeptic on AI in terms of returns to these companies long term. I'm not sure if the race to be involved in this led to some kind of over the top capex. That's still to be determined. But what looks pretty strong are all of the names involved in the AI space. I'm still seeing all the momentum baskets just starting to set up for breakouts again, or at least a lot of them. So what this is kind of telling me is that we should be still involved in this trade, but also that we're going to be needing a lot of hard commodities, a lot of real things to build stuff with, real steel, real met coal to make the steel, real aluminum, all sorts of stuff that we want to be involved in, a lot of critical metals as well. And I think by being diversified in these, it's also really nice because they provide some sort of hedge, and you get a kind of barbell effect. And nothing is going to hedge as well as perfectly timed puts, of course. But it's nice to have some built-in cushion in your long-term port, in terms of precious metals, in terms of things that balance out a very tech-heavy port that most people have nowadays, because they have so much in either SPY or QQQ or any of the mega caps individually. And they don't even realize sometimes how heavily weighted in tech they are. So it's really nice to have these on your radar and look for some spots to get involved. Hey, VSync, good to see you, man. Valet, yeah, absolutely. So this is another thesis that I have had for the past year or two, and I think it's going to continue and start speeding up here. And that is that the dollar is it's having a hard time, and I don't see that changing anytime particularly soon. I think we are going to see continued devaluation over the next couple of years at least, and I personally believe that trend's going to continue. Um, I think that gold's place in the ecosystem, in the geopolitical economy as a whole, is going to continue to be strong. There's going to be multiple reasons that people are going to want to buy it. And I think it's prudent to kind of play in both areas here, because you don't want to just be sitting in commodities when it's a big speculative tech rally, and the Nvidias of the world are up 8% on the week, and you're fighting for your life. Because I started out as a commodities trader, and let me tell you, being a commodities trader in 2021 was not very fun, because all your friends were trading QQQ and making a killing, and you had to really fight for your money. So, so the other part, oh yeah, what I was going to talk about is, due to that dollar devaluation, there's going to be a lot of opportunities in terms of basically, countries that are going to benefit from that, which is everywhere else, but especially I figure Latin America is going to be doing very well. And again, we'll get into more of the exact reasoning next week when we really dive in. But in general, I want to have exposure to Latin America for the most part, and diversified a little bit. Not all in any one country, but I really like Argentina, and that one's a little bit risky. But Colombia is interesting. Brazil, like Talk mentioned with Vale, we can pull that up. All of these have a lot of potential long term. Look at that beautiful chart. I've been watching this setup form for literally 5 years. And we thought 5 years ago this was the time, and it was going to go up here, and it needed to run everybody out all the way down. But now it's finally got the big breakout. And so it's testing this. I'd love to see a higher low like this. I don't know if we get it. But yeah, these names very strong in terms of like a yearly horizon. If we look at the index for Brazil, again, just back testing the potential massive breakout here. It's a really pretty long-term chart. So yeah, I really like Brazil. We can look at Argentina. Incredibly strong still. And basically the idea here is that as more countries in South America kind of embrace neoliberalism and working with the United States, it's going to open up a lot of business opportunities there, and money is going to be looking for places to kind of capitalize on both growth and a weakening dollar. So I like banking in Latin America. There's a few that I'm involved in. I like NU a lot long term. We're in this one from like 12. That one's working nicely. And there's some more too. So yeah, these are some of the themes that I'm kind of batting around here in terms of the big picture, right? See, all these charts are monthlies. So, we're talking long term. Where are we going to be in a year? And I think a lot of these are going to be up 20 to 50 to 100%. So some really interesting stuff there. But that's kind of where my head's at. One foot in the commodities, real things to build real things, and then one foot in the kind of more speculative narrative stuff, like we talked about AI. We can go into those tickers, but also things like space. I think space is very interesting. Quantum's on my radar. I'm not sure it's quite ready yet, but it's possible. I really like space a lot more. I think thematically in the next year, it's going to be a lot more immediate, even if it is still pretty far down the road. But it'll be more immediate than quantum, I think. Um, so that's an area of interest. Uranium, still think that there's a lot of room left in the uranium trade once it gets going again. So if you want to be patient, CEG getting really tight. When it moves, it'll move nicely. It almost always breaks out upwards. This is a great company, run very well. Nothing but good news going forward. So, definitely not a bad place to just drop some money, in my opinion. If you want to get more speculative, you can look into some of the nuclear reactor or, small scale reactor type plays. SMR, I think, is a dog. I do not think this is the one you should be in, but there is an interesting level down at 13, which is a key fib level. And there's a chance that it bottoms there, and it's an amazing play. So I will be watching it there. Yeah, I want to see what it does at this 1250 to like 13 handle, this 786 fib. Often these get run out, and then it could sweep stops there and actually hold this low and start like a big base rebasing process. And if you size small and get a little piece of these, like 0.5% of your port can become 2% of your port in a year, if you get lucky. So just something to consider. Um, Man, tacos in Rocket Lab at $3. That's crazy. Hey, Columbus Realtor, what are your thoughts on ASTS? Has been dumping hard, but looks like it may have found a bottom today. Let's check it out. So I think they dumped on the Blackbird launch, right? So I think that was just a matter of the price was going parabolic into that. It was the first mover. Rocket Lab was starting to really pick up steam then. Money was looking to kind of reposition in the basket, and there was a binary event, and nothing amazingly good happened. That's kind of how I look at it. I think that long term on these names, like you're just going to have a lot of crazy moves. Like, look at this. This is a insane 55, 53, 50, whatever to 85 move. And then it dumps all the way back down to 60. And then, geez, a week later, right back up at 87. So this is just volatility without losing a key level. That just tells me that this is a name that more and more volume is coming into, and you can see that big influx of volume over the past couple weeks here, past month. And really, if you're in this name as an investor, it's just getting started, in the sense that, like, if you believe in what this company is saying they're going to do, and if you think they can execute, this should be, I don't know, I have no idea, more than $100, that's for sure. So that's one way to look at it. If you're just purely a levels trader, still compelling here, in my opinion. It's holding these moving averages at least pretty decently. I'm going to watch how it acts here. It might have found a bottom, like Columbus, our friend here, was saying. So let's hone in a little bit deeper. So getting into the hourly. Whenever we have a very nice bottom and a very clearly defined top, at least midterm, we want to fib it out and see what we can see. Often I don't know exactly what I'm looking for until I do this, but usually I'm looking for an interaction with the golden pocket, so the 62 fib to the 78 fib, and then I'm going to be looking for an interaction at 50. So when it tried to catch here and plunge straight through, that's telling me, okay, uh, because of the volatility, smart money needs to be offered a discount on this name. So it needs to be trading under this 50%. They're just going to plunge it straight through and see where the buyers actually come in. So in the 6.2 fib, this is where you see some bottom wicks here, some mixed tape, as I would call it, sideways action. This is a sign that there are some buyers starting to step in here. Today, we like the bottom wick and the push up there. I'm sorry, this is after hours. I'm so disoriented. Where am I? Okay. So yeah, I think that there's somebody digging in here, and we can look and see what level this might be in particular. There you go. This is like the pivot right here. You can draw out all of these bottom wicks here, kind of like that zone. So an interesting look here. It's a weird, messy chart. I'd say if you had a bunch of FOMO because you missed this move and you're not invested, you could start a position here and look to add more on a sweep of and reclaim of 69-ish, 68-ish. Kind of what I'm thinking, but basically it's coming back into the near where it started breaking out from here again. So I don't think it's dead. I don't think it's dead. Kind of my thoughts there. In terms of long term, I love all these names. One that I want to put on you guys' radar is RDW, just because it hasn't popped, but it's starting to look like it might be ready to. I'm seeing this big volume accumulation. You see all this volume flooding in, and it surges up, comes back to the moving average cluster, catches, surges again, comes out, clears more stops higher up in this previous range. If we look at this kind of pivot zone, see it's kind of just popping back in there, transacting back in there, still fading, but we might be making the higher low here that we're looking for. And then the idea is that essentially this becomes a consolidation zone or a higher low or a handle to this cup. And we can get a really, really nice explosive move up. Long term, these guys are, they're like kind of like space infrastructure, if you will. They're probably one of the biggest beneficiaries of Trump's whole race to the moon, whatever the heck he wants to do. I don't know, moon bases, I guess we're doing. Who knows? Doesn't need to be real for these stocks to go crazy, you know? And long term, I just like that it's trading back into this really long term base. And it seems to have caught very neatly there. You can see that the bottom held. So what this tells me is that if it can stick this move, start curling out, there is a ton of upside on this. You know, we're talking about an $8 stock that if it goes back to the middle of the range, what would that be? That'd be a double, you know? And if the actual trade does play out, then what we can do, oops, I'm going to reverse the or the direction of this fib. And then we can project upwards with the extensions, just potential targets. And as you can see, you only need one of these moonshots in your port, size small, to really make a big difference for the year, you know? So if the fundamentals align, it's definitely on my focus list. Because it could be a 5-bagger share play. Never know. Alrighty. Yeah, Joe talking CLF, Cleveland Cliffs. This is my favorite company for my first year of trading options. Like when I was actively like day trading for the first time, you know, first like year of that. Absolutely loved it. Loved the narrative. The CEO was so much fun to all of his shenanigans. Not necessarily the best run company in retrospect, but hey, you know, really fun to play. You can get really big moves, and if steel is hot, this thing can trend like crazy. So this is, man, I almost didn't recognize this chart. Let's pull back. This is also on my focus list here. And the idea here is that if commodities keep trending, then laggards will eventually catch up. This one has been punished for being, can I say shitco on here? Shitco. And so it's going to take a while for that kind of overhead volume to burn off. But what we're seeing here is it seems like it's very close. You see the upward moving averages on the monthly here. The downtrend line is starting to be broken here. We have just about healed this gap on the daily now. We did heal it, and we're just consolidating very tightly. This tells me that, yes, we might come back and fill this gap. That's where I'll be looking to take a position. But I think that we are in the start of a big move up on all of these names. So you look at that, looks pretty good. You look at the leader in steels, STLD, screaming. Space burned you, Josh. Dang. Yeah, space is such a wild one. Sorry to hear that, but yeah, that's definitely the way she goes on these. Let's look at space. Look at all that volume though. It makes me want to keep it on a watch. Keep it on a watch list. All right, let's really. It's gonna take a while, guys. Enhance, enhance, enhance. Oh, geez. Yeah, this thing messed a lot of people up, as you can tell by the scrolling necessary to make this chart visible. Holy. All right, here we are, way down here at the bottom. And honestly, this still looks ugly to me. But somebody's buying it. Can they make anything happen, or is this a bear flag that just broke? Or is it a fake bear flag and we start to curl up? I don't like this one personally. If I'm going to be playing a questionable D-SPAC from space, this is my guy, Lunar. Now that's a healthy base right there. If we come back and hold 15, it's getting pretty close. Definitely interested. I'm sad. I was talking about it the day before it went up 30%. Wasn't even watching it the actual day it happened. Clown shoes. But yeah, it's coming back to this 15, so going to be keeping an eye on it. Because, man, if this is just basing, you got 1, 2 bottoms, and it pushes up and on out. $30+ stock. Yeah, HHI. Ships. Talk, you might like some of these other ones I got cooking here in the aerospace and defense small cap space. There's some really fun stuff. HII, definitely not small cap. Definitely strong, though. Look at that. Incredible. Let's go back to the monthly. I want to see more history on this. Yeah, 159 to 360. Crazy move. And this is what I love looking for, especially at this time of the year, because, we can find stocks way down here in the bottom of their like major ranges, and you can catch a yearly move, and it's just explosive if you get, lucky and are looking in the right places. So we're talking about ships here. Let me talk a few small cap ship ones. Not even ships per se, but oh shoot, I got to double check which is which. All right, hold on. All right, I'll show you some small caps in the aerospace and defense, and then I'll tell you what they are in a second. But there's a lot of them that look really good to me right now. So Mercury Systems here. I believe they do some kind of electronic components for drones. This one's looking wild. Not just drones, but other like aerospace stuff too. So basically, we got massive flag here on the monthly. Sorry, this is the daily. What is going on? Still not used to the sizing on this, scaling on this system yet. Is it because I have volume profile? Is that why I can't scroll over? Sorry, brain lag. All right, we don't need the monthly. Weekly's enough. Look at that. It just looks like it wants to keep going to me. So, assuming it can break this trend line, of course. So we're getting a little ahead of ourselves, but we like the sector, so we're looking for these kinds of charts. MRCY, I like that one. Let me pull up my other list on the other screen. There we go. All right, so this was the ship one. CODA. They do some kind of components for submarines. All I know is this one looks like, I believe it's like a, oh shoot, I got to do more research, but this chart looks amazing to me on a long-term perspective, and on a short-term perspective. Man, if this range can break, straight shot to the top and could keep on going. So definitely a chart that I like the look of. Should we get into the AI stuff yet? How are we doing on time? This one's going to be a little bit shorter, guys. So maybe 15, 20 minutes or so. Going to be wrapping it up. But next week we'll be getting into all of the rest of this. We've been mostly talking about we started with commodities and we moved into some speculative growth areas like drones, aerospace, but I want to get much deeper into it. I have more stuff to talk about with financial stocks too. Been doing my homework there, and I'm really liking what I'm seeing. Also, what else? What else? What else? Oh, talk. You mentioned Chime, I think. I've been poking around a little bit, really liking this one. Want to keep it seeing or want to see it keep setting up like this. Just keep it really tight in here as these moving averages catch up. I want to get involved off a moving average. I like Chime. Dave is setting up really well. A lot of these are looking really good to me. Some of the fintech names. Dave, very compelling daily chart here, and the weekly looking even better to me. If we can get the full price history on the monthly, that'd be great. We can't see it because it was back like a couple of years ago, but it did. It used to be much higher, and this was a big neckline, this 220-ish area. So it seems like we're consolidating there and ready to keep going. So this is on the focus list too. I want to get involved in Dave. And there was another one. This is my favorite of the regional banks right now. I think this one looks pretty darn compelling, just flagging out here. Moving averages gliding up. Nice big base. I'm not sure regionals are quite ready, but they're definitely on my radar here. That's a really pretty weekly chart to me. Double inside week, double hammers, moving average crossover. Pretty cool. Could be a big mover there. And since I mentioned it, let's look at the index itself. Yeah, in Jan, all student debt loan or student loan debt will become realized. Yeah, I from my very I probably spent about 20 minutes researching the sector so far, but I want to keep diving in this weekend. But what I was looking for names that were very minimally or not exposed at all to student loan debt. So we will see. Yeah, puts on all buy now, pay never stocks. Yeah, this is why I'm staying away from Affirm and Upstart. These ones seem more interesting to me. Um, KRE, I just to me this looks like it's bullish long term, and that would align with my thesis overall. So I gotta believe it's bullish. I just have trust issues on a daily chart with a flag consolidation like this, where it just keeps drooping. It's like, why did this candle happen? Why did this candle happen? This candle should have led to an up candle. You know, why did this candle even happen? You know, they start doubting everything, and it's like, okay, well, if this was fake, where do we really need to go to? I'm not quite sure yet, so I want to see what it does at this 21-day moving average. It's going to be an area of interest there, I think. Yeah, but that's why I'm staying away from the affirms and the upstarts because otherwise the charts aren't bad. Maybe this goes up a lot, but I just don't love the risk I'm exposing myself to there when I could just be kind of avoiding that with the Daves and Chimes. I think they're much less. Need to keep double checking, so don't quote me on this quite yet. But it seems like they're much less exposed to the consumer. Sorry, I lost my train of thought. There's so much I want to get into here. We will touch briefly on AI and some of the power center stuff. But let me see. Were there any plays this week that I made that I wanted to talk about? IWM was pretty good. IWM yesterday was a good example. We can give something to the day traders here. Their eyes are probably glazing over, probably falling asleep with all these monthly charts. So Russell on what day was it? Is this day, I guess? Christmas Eve? Yeah, it was Christmas Eve. So on this day right here, we were essentially looking to get involved in, I'll mark it out. Yeah, the 251.50 area. So 251.50 to 251 was my buy zone there. So hard to see. There we go. And basically the idea was when it came down to this zone, there was going to be a big gamma wall here. It was the gamma flip level. And I just could not imagine IWM completely breaking down while SPY and Qs were so strong. Like, sure, okay, it's not going to break out today. That's fine. Understandable. Money's rotating. Totally fine. But the chart looks very constructive midterm here to me. And this was the very key level where if bulls were going to hold the flag structure, they would hold there. And as you can see now, we need to reclaim it to kind of reset up. It's starting to look a little bit like we're not just going to do the straight curl up that would have been nice. But essentially, so I'm looking for buyers to step in this zone. And now we're going to zoom into a 5-minute chart. Heck, let's do 1 minute. Give the people what they want. Okay. Here it was, and it opened. Yeah, right under the 252. That was a significant strike. And so essentially this was a zero gamma bounce setup. If you watched my last gamma exposure profile or webinar, we talked about 5 setups. Really good one to watch if you haven't. But one of them was this gamma bounce. And the idea is that you're looking for a clean bounce off of the zero gamma level. And you are going to be essentially playing this and looking for the whatever the call wall is. So wherever the big accumulation of gamma on the upside is. So essentially, I believe that was 250. Okay, so it was 252 and 253. There were 2 kind of blocks, and we can draw those out. I like to give it 25 cents on each side for the zone, which is actually pretty wide on IWM. So let's do like 15. Something like that. So that'd be the area I would be looking for sellers. And we would be trimming in the middle area of the range. So this is the bottom, we're assuming. And we're assuming this is going to be the top because we don't think it's going to break out today. Because if it did, I don't know, it wouldn't be taking this long to base. It like tried to break out end of day and just didn't have time or juice because everybody was watching SPY make a new all-time high. So totally makes sense. So then we also have the pivot, the middle of the range. So it's basically where we're trading at a bunch yesterday, kind of closed, opened this general area, and lo and behold, it is our 52 level. So that zone right there. So this was a really nice trade because we saw right off the open, we whipped down here and we actually caught a really, really cheeky long and then sold it in 1 minute. That was sick. And then it came right back down to our level again. And then these bottom wicks were really nice. And this stick right here was telling me, hey, be ready to buy because it looks like we're bottoming into your zone, right? And essentially it actually overshot that 251.50, the zero gamma. So the idea is, yes, it can overshoot pretty aggressively. That is a 40-cent move, not too small on IWM, considering it is an index. So it's not clean, right? Because we're in we're in negative gamma when we breach this top of this zone, and that means that price action is whippier, and that dealers need to sell into the momentum, and then they need to buy into the momentum. So price flushed out pretty aggressively, but then we started seeing the beginning of a potential whippy action back up. And when we have the potential for a whippy push back up, and then we can breach above a very key level, that is a very high, not necessarily high probability, especially high probability, but really low risk setup, right? Because we're only risking the low here, and for me, it's pretty darn high. That's good enough for me to take a good size on. So we saw this candle here, made me very interested, and then just market buys through the top of it, and then just right back in this zone. Not going to pretend I got a perfect sell right there, but came back down and then came back up in here, took more off, and then came back down and gave us another 251.50 perfect bounce there. So just really nice back and forth trading of our levels and our zones here. So got one long, did not short because we weren't looking short, on the day. We were looking for this to be a hard support. And if we had shot up off it that quickly, then why would we be looking short? So it was low volume Christmas Eve, so it was whippy price action, not super easy to trade if you didn't have clear zones that you were looking for. But yeah, so we took the long, missed the short, took the long. I believe I sold through the high a day. That's usually my go-to take profit on any kind of setup like this. And then comes back and we got long again, just instantly responded. So then we're like, oh, okay, so it's probably going to be a trend up day. So then we were able to build into this on some of this action here as it reclaimed the moving averages, like probably on this wick down here and then coming up. Whenever it's looking like this and pushes down and then starts to move up in the wick, you can get a little add in there. And then as always, you take the add off as it breaks the high day there. At this point, down to runners, and then we're basically looking if this 252 zone can flip. So I think that I didn't get involved in any of this area here just because it didn't quite get down to 252. But I did have a runner, a call runner that I actually bought it for 18 cents. So 18 bucks. And the low of the day was 16 right here. So it was like up like 200% here, even as it was flagging. So I was just like, all right, I'll let one run. Really thought we were going to get to 53. Just couldn't quite do it. So this was a good day of like, I think that it was a good teaching day for gamma exposure and trading gamma exposure because it didn't work perfectly, but it gave us good enough, right? So this zero gamma level, it didn't bounce perfectly. It overshot and had to reclaim, but it was good enough for a nice trade, 2 nice trades, 3 nice trades off of it, and just super mechanic or, just like bread and butter, not shooting for the moon here, taking the obvious, what the market gives you, right? So if you did get long in here, your target's a high day just because that makes sense, right? Like if we get there, sure, it's a good chance that we move significantly higher. But that is also the place where sellers could step back in. So if you see weakness before or right as we go through high day, great place to take some off. And same thing. We come back down to this key level. Great place to take a little, nibble if it looks like it's catching there. And again, run the top, gives you an out, then comes back a little into this imbalance, and you could get back long in there. So you can do these really fast, just in and out trades here and get really nice returns. So that was one trade I wanted to highlight just because there was so much interplay between these 3 zones. And that was, a relatively ambiguous Gex profile, I would say, with the big level down here being the wall. And then as we came into it, those puts got monetized. And then this middle level and this one became slightly bigger, and they stayed bigger as we drifted up. But it wasn't like a very clear sign that we were going to 253, for example. It was like, okay, this is a pull and this is a pull and this held. So we're gonna end up somewhere between here, basically. So it doesn't tell you exactly everything always. Sometimes it'll tell you exactly what's going to happen, like what it looks like it's saying is going to happen ends up being perfect. Oftentimes it's just good enough, and that's totally valid because you still get some really nice trades like we talked about. All right, I'll turn my neck and see what else is going on over in the comments here. Sorry. Okay. So just wrapping up here, but I'll give you a few. I'll give you a few teasers for the AI section, and then we'll jump all into that, and then we'll go over the whole thing next week. All the good stuff that I know people want to hear. All of my positioning for the next year, what I'm looking to buy, where I'm looking to buy it, all that. For now, I'll give you an obvious one, then I'll give you a fun one. I'll start with the obvious, Nvidia. If you are bullish on AI still, you should be bullish on Nvidia still. Just that simple. I think this chart fooled a lot of people, myself included for a while, until I kind of just stopped overthinking it. So let me tell you what I mean by that. Everybody was so sure that the bubble popped there. And then Everybody was so sure that we were going down to 50, myself included, down here and down here. Meanwhile, we're trading 5% under all-time highs. We're about to reclaim this. Is this even a real candle? I don't even know. I'm so tired. I can't even think about what Nvidia did. Anyways, the point being, this whole range here, after the crazy breakout on the monthly, everybody thought it was a bubble, but what it really did was double bottom off of the previous consolidation zone, smash through the top, and now it's flagging above that. So what I see is this is essentially a cup and a handle here. Sure, it's the handle's actually above the cup, but when this happens, it's often really explosive and bullish. I remember ASTS did this, just a picture perfect cup and handle, except for the handle was 10% higher than the cup. I was like, I don't know what that means. It meant go long with everything you had in the bank, apparently. So I'm not saying this does that, but it's looking really constructive to me, and it aligns with what I would expect to happen fundamentally over the next year. I think Nvidia's got room. I think it's got room. So we can consider targets that are extensions of the previous range that we're breaking from. Top of the range there. Can do bottom of the range here. You could do bottom of the range here as well, because this is the range that we broke, and now the extension up. See, we are playing with the 161.8. Does not look like a rejection to me, so I would assume that we're going to go up and tag this 200%. This is usually what happens. It's a 1x move from the range to the next range up, and then it enters some kind of consolidation again. Not always, but if it doesn't fail at the 1.6, usually it's the 2. So Nvidia, we're still long. I have 5% exposure right now, and I have 30% allocated to AI. Not all of it is in plays right now. Some of it I'm waiting for my entries, but that's the amount that I'm looking to put towards like that side of the growth narrative. Then I also have a lot of commodities, a lot of miners, a lot of diversified miners amongst. I mean, you pick it. If they mine it, I probably have some shares in it, or I'm looking to buy some shares in it. We'll get into all of those next week as well. But first, let's talk about one more fun AI play here. Which one do I want to give you guys? So many choices. I think we're gonna do. I won't do the same one we did on Trader TV. How about? Yeah, let's do that. We're gonna be talking about basically angles to play AI that aren't super obvious like Nvidia. So we're thinking more like picks and shovels type things, and bottlenecks in the processing, the testing, the supply chain, essentially, of the manufacturing chain of Nvidia, not of Nvidia, of of just AI in general. I'm going crazy looking at this chart for too long. So this is an area that really didn't pop much while the Nvidias and the Broadcoms were going crazy. Names like Teradyne, great example. This one has been amazing for us this year. We got in at 94 or something when it was breaking out of this flag here. And just boom, crazy move. And if we zoom out to a monthly, it's probably got a ton more room because it's basically breaking out of a big, you can't even see the whole cup. It's like that. And here's the handle breaking out. So these guys, as well as Amcor, another of our positions in from 24-ish, are both involved in the packaging and testing of semiconductors. So this is an area where there's a big bottleneck, basically, and they just were trading sideways while everything else was going crazy. So I'd love to see these ones catch up and start to go crazy as well. I think the charts are set up for it. And what was the third one here? Yes, Click. Kulik and Sofa Industries. I don't know how to say it, but I do know that this is a really compelling long-term chart in the same space of chip packaging. And to me, this is just like looking like a fat pitch setting up. Just like boom, cash money. Love this one. Love this one. And heck, I'll give you guys one more here. One more. I need to do more research on what they actually do, but I know they are an AI play. They came up on my scanner again. We played this one very well, although it was very frustrating for a couple weeks. Zoom out. This is A Lab here. So this is one I want to double dip back into. We played it. We got involved in this flag. It just tortured us for week on week on week on week here. And then eventually, incredible move. I sold, too early, of course. Took half off when we broke the highs here. I think I took the last of my shares off at 200. I thought, holy moly, that's more than good enough for me. And then, it went up to 270 almost. Crazy. But finally cooled off. 1, 2, 3, 4, 5 little move there. And we traded back into this high. If you draw a zone, we can see that the previous wicks up here have flipped into support. Tested it multiple times. A nice rounded bottom, little 3-bar pattern right there. A little high, middle, low, and then a little high. That's put in one low, and then we pushed up and closed really strong intraday. This was, intra-week, last week. So that's a really nice higher low there as well as we curl on up above these curling moving averages here. So you could also say this is essentially a cup and another elevated handle here. You could also just say it's some kind of bullish pattern here, but it's definitely trying to break this flag. Now, if we zoom into the daily, it's essentially a flag on a flag, and I love these setups. So we have this downtrend line, clear change of character, right? Now we have a little itty bitty flag forming right here. Maybe it bounces down here, comes up. I'm looking for this 160 handle. That'd be a really nice place to get involved long term. Off of these rising moving averages here, it'd be about a 50% retrace of this little push here, effectively a back test of this change in trend. So it might go back under this downtrend line and then immediately get bought up. That's what I'd really like to see. And that would be pretty much perfectly on Monday or Tuesday, sometime next week, coming into this 160 handle. 160 to 162, that's the buy zone here. And again, for our targets, first off, we got to zoom the heck out. Because when a chart looks like this, it's going places. So we will take our fibs and we will draw from the low. Oops. Sorry, draw from the high to the low. And we are talking about the potential, not guaranteed, of course, but the potential for a move to, I would say, 400 and 500, both doable in the next 1 to 3 years. When this thing moves, it moves. So it went from 40 to 150, so over 200%. 50 to 250. It's what, 500%? So 150 to 500, that'd be pretty standard, pretty par for course for this kind of name. When it trends very hard, and it's been, consolidating for quite a long time now. One thing that we can do is we can note. Let's go to the monthly, because I want to try a little bit of a time cycle thing, because it looks like this chart it might work on. Whoops, don't know what I did there. So what I want to see is I want to measure the time that it spent consolidating each time. So let's see, pushed up 1, 2, 3, 4, 5 months consolidating, pushed up, 1, 2, 3, 4, 5, 6 months consolidating. Or you could say 1, 2, 3, 4. 1, 2, 3, 4. So we're about to end this month. Fifth month coming up. I think in the next month or so, it's going to be ready. So depending on your time frame, you can enter now, front run it. You can wait for that 160 if you want to snipe it. Or if you're really long term and you just want to wait for the clear breakout, you can wait for like a weekly close over 180, I guess. Maybe over 183 there. And we should see 200 pretty fast. It's a good trim spot. And we'll keep on negotiating our way up the right side of the wall here, I do believe, which is a crazy move if we get it. So definitely on my focus list for AI plays into next year. I have 8, I believe, in a basket. 6 to 8, something like that. I can't remember right now. So we'll have a lot to talk about next time for sure. I did not burn all of my material this week, but I think that's enough for now. It's been a sleepy holiday week. I hope you guys all had a very Merry Christmas. I hope you guys all have a very great New Year's and whole 2026. I hope you spend it with me. I'm going to be here trading with Trade the Pool. And yeah, we'll have plenty to talk about. So definitely tune in next week for that. Also, of course, tune in bright and early Monday for the Mitch and Michael show, and I will be doing the Power Hour from Monday to Thursday as well. So thank you so much, guys. If you're new here, by the way, you can always reach out to me, find me. I'm very active in my Discord server. That is in the bio of my Twitter. So my Twitter is at Steve Tileman, SteveTeilmann, and that's how you can reach me. Definitely give me a follow if you don't mind. I'd appreciate that. And I hope you guys all have an amazing day. Thanks as always. Great to be chatting with you, Talk. Glad to have you in here. Josh, good to see you. All the regulars, of course, Joe. And I'll stop rambling now. Everybody have a great day. Take care.